Hey everyone, welcome to Breakout Wednesday for the 13th of March 2024. It's currently 9:30 p.m. on the West Coast and just after midnight, obviously, on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, I missed last week. Sorry about that, guys. Last bit busy at the moment. I've got a bit of a new format for this week. We'll see how it goes. Leave a comment below if you think it's all right, and I'll have a crack at just doing a few more like in this kind of style. Just wanted to do a scan that I love doing every day, and I'm just going to do it on kind of a watch list of mine that I've kind of created for the purpose of this talk. All right, I'm really talking about trend trading today, and more specifically Darvas box trading. Okay, a lot of the stocks I'm in and I've been talking about over the last few months are going to come up in this, plus some new ones, plus just an example of why I think this is so powerful. And I think that this kind of thing out there where everyone thinks there's some secret sauce or holy grail or some magic pill that is going to make them millions in the stock market. And I think the moral of the story is that simple things are the best. And it's not really the system, there's a lot of trend trading systems out there, but it's having the discipline to bloody stick to it, right? And just being patient and let it play out. So I'm just going to roll through a bunch of Darvas boxes that came up in this scan of mine. It's a scan I do every single day. Just this set in here, you can just screenshot that and save it. And first of all is AMP. Okay, a lot of these finance stocks are rallying. A lot of the kind of CBAs, ANZs, all the stuff I've been talking about. All the little kind of non-bank lenders are raging. The insurance companies are raging, and here we have AMP setting up with a nice kind of bull run, and then a Darvas box. Okay, this is a first Darvas box. I like the Darvas boxes when I'm trading the first box that are kind of happening just after all these moving averages start converging and coming together. And so I think AMP is really setting up there. Let me just scan through here. Amazon, okay, there's a mix of ASX and ASX stocks and US and ASX stocks here. Amazon is in 1, 2, 3, 4, 5, 6, 7. That's just like 7th or 8th box there, okay. And if you look at Amazon when it first formed its box, it was right when all these moving averages came together. Okay, we had this kind of downtrend and choppiness and this choppy bottom, then the moving averages start coming together and converging, and boom, okay. And this tends to be when the risk reward is at its highest point, because there's a much higher probability that we're at the start of a new uptrend, right? And therefore, it's much better to take a trade that's just sitting right above its moving averages and extended up above its moving averages, or a position trade or a long-term position or whatever, because the risk reward is insane, and the risk on that first position is very low. Okay, and you can just say if you take this box here at 110 with a stop here at 99.12, boom, you're risking what, like $11 for the opportunity to make bang, like endless money. Okay, and so that's what trading's all about. And I think we all overcomplicate things and try and be super smart, and I think that sometimes the simplest systems are the best, right? So let's just get moving. AutoNation, I put this one in here. It's on the NYSE, just because I love these simple businesses that most people overlook because they're not hyped, right? I've been chatting to a few people on private chats about this trade I've been in AZO. I'm out of it now when it broke below this doji, but AZO set up in this huge base here, okay, at all-time highs. It's like this expensive stock in the auto industry. It's very profitable, it's very, very, very profitable, and it just continues to be profitable. They do share buybacks, and they really look after their shareholders, and it's just one of these stocks that most people overlook because it's not a semiconductor, it's not a Bitcoin stock, it's not a AI stock, but at the end of the day, it's got this boring business that just prints cash, and I like those trades. Okay, and so when I see stocks setting up in kind of the different industries like machinery, heavy machinery, some finance stuff, auto stuff, I just kind of dive into the company and see if it's actually a money-making, machine. And if it is, I give weight to those entries a lot more. Okay, so that's enough on that, right? ANZ, I was talking about ANZ obviously when it was back in this huge base. It was coupled with a Darvas box. It's fascinating how often these large bases are coupled with Darvas boxes, right? Either high, boom, and now it's in its third box. Not hard, right? But how many of you listening actually took that trade? And how many of you stuck with it, right? And that's the difference between making shitloads of cash and not, right? Having the discipline to just damn take the trade and just stick with it, right? Until it gives you an exit signal. This hasn't given any exit signals. I mean, shit, hasn't even closed below its 21-day moving average, this purple one. It's just been above its 10-day the whole time, a few wicks under it and then boom, right? So, it's just classic stuff. Okay, here's just another one. It's in a boring old building products industry. Doesn't matter, man. Right? Like this thing just prints money and gave amazing signals and went for it. Okay, let's just move on with it. I just put that in there because holy shit, look at that. Car on the ASX. Everyone knows this stock. Okay, and it's about its 7th or 8th box. Once again, it's moving. The first signal was given when all these moving averages came together. The one stock I've been talking about a lot, the last few months is Xero, right? And remember when I was talking about Xero back here, after all this moving averages came together and it started tightening and basing and boom. I'm still in it. I haven't trimmed anything on Xero. I'm just holding the whole lot, and today it closed at a new high. Okay, and so. Anyway, I'm diverging, but the whole thing I'm looking for here, the best signals happen right when these moving averages are converged and it's sitting right on top of that, okay? Once it's up here, it's like extended. All these moving averages, look how far apart these moving averages are from each other. It's very extended. Even now, like it's too extended, right? I've got these lines here, but I'm not going to add to a massive position up there because it's just, the risk goes up a lot more, okay? Now let's just get the hell on with things. I like this Darvas box and CEL and ASX. It's a penny dreadful, but it's got nice resistance here at 85. It's got nice volume that's come in. It's a bit of liquid, obviously, on the days that it's not pumped up with huge volume. But this is just a first box with a nice resistance line, and kind of keep an eye on that one. Capital One on the NYSE. Here's just like, check out, this is just what I keep talking about, this Darvas box sitting above all the condensed moving averages, tightens up here, really tight right hand side, breaks out, boom, and now it's in its third box. Look at this box here, right? Not as nice as this because it's a bit more extended from its 200-day and 150-day moving average, but it's sitting up here, it's tightening up, it's just been going sideways, and it's the third Darvas box. Okay, so and there's endless examples, but I'm just, there's a lot to go through. I'm just going to quickly keep rattling through. Salesforce, amazing company. CrowdStrike, holy shit, right? And all the CRYP, okay, ETF on the ASX. Now, I don't talk about Bitcoin as much these days because it's hard to find the time, but I'm still just as bullish. I still own Bitcoin and ETH. I still keep adding to my positions every week and dollar cost averaging into them. There's so many ways to access Bitcoin these days. Here's the ETF that just listed the other day, and the NASDAQ the other day, 2 months ago or whatever. It's had an amazing run since. There's been some amazing entries here, by the way, guys, which I kind of got a little bit, but I really kind of munted it a little bit too and didn't trade it properly. But, I think it's worthwhile just having this ETF in your watch list forever because it probably will give a lot of trading opportunities in the years to come. Okay, and here's just more examples of just amazing trends. Here's one that's kind of tightening up on ASX CU6, and it's hard, this one, right, because it's in its 1, 2, 3, 4, 5th or 6th box, and it's easy to say shit has gone up too high, right, because the risk up here is a lot higher than back here, of course, but you could have said the same here, you could have said the same here, and for me, when they're in it's a mature trend and maybe a little bit toppy potentially, I will only take it if this tightens up majorly, all right? And so for it to tighten up majorly means, whoops, I meant to do that. I meant to do volume. Is the volume to dry up well below the 60-day moving average in volume for a long time, at least a week or two. And so this needs more tightening. But if that can do it, then yeah, I'll take it. It might be a more short-term trade. I'm not going to sit with it for a year or two like I would if I was lucky enough to get back in, here at 93, right? But I'd still probably take the trade if it tightens up enough. Here's another one. The reason why I love these Darvas scans is it finds what's happening and what's exciting. So this wasn't a takeover offer with CUE. This was an announcement of, you know, a special divvy, plus it was their earnings announcement as well, and they, you know, they obviously are doing pretty well and making cash. Okay, and so you know, the whole fundamental versus technical thing, you know, when you're a pure technical trader, you tend to be on the side of the fundamentals too, right? Quite often, because you're with companies that are going up. And why are they going up? You know, quite often they're going up because they're damn good, right? Because they've got some good fundamentals behind them. Not always, there's obviously exceptions, and something goes off on fairy dust, you know. But CXT, another one, this is just a machinery, boring, you know, industrial machinery. A lot of people just scroll past it. Instead, you know, I kind of look at it and think, great, maybe a lot of these boring companies have amazing businesses. And I'll jump in, have a look at its earnings, have a look at its last earnings date, see if its earnings going up, see if it's beating expectations, having a look at all these moving averages here coming together and saying, shit, is this the start of a new uptrend? And then, you know, if I like the fundamentals, I'll take an entry of 61.22, a break of that, and I have a stop down there, and I'll be risking what, you know, $6 for the chance to be in this thing and make, you know, 10x that. Okay, you know, risk reward is insane on some of these things. Here's just an example of DEC. You know, I'm going to probably talk a bit too long today, but DEC is just an amazing company if you want to, you know, do some research on it. But it owns some great brands, and it's great at building those brands. And this is just, you know, sitting in this 5th or 6th box and probably going to keep going. Here's another one, boring sector, DHI, sitting in a massive box with blue sky above it. DraftKings, gambling stock, blah, blah, blah. But, you know, sitting in a box with blue sky above it. Another example, IAG, I'm in this guy. I've been talking about this one for ages. Okay, I've been pretty patient with it too. I didn't get him back here, got him here, and then, you know, just sitting in this box and basing away. So we'll see how it goes. It's probably underperforming my other, you know, kind of biggish insurance play at the moment, which is Suncorp, and but I'm sitting tight on Suncorp too, and just going to, you know, try and ride this a fair bit higher if it lets me. This is a stock that's, you know, an IPO back here, probably backdoor listing obviously, and now it's forming, you know, inside days. Okay, so all these candles are inside this, but we've got a new scan coming out in a month or so that searches for inside bars, okay, which is going to be a super kick-ass scan. And you know it's going to find stuff like this, right? And so this is just an IPO. I love trading recent IPOs that have nice tight bases. An example of one recently, you know, for those who have been, you know, had their finger on the pulse is ARM. Okay, actually I've got that coming up. 1 second. Yeah, so ARM's one of these kind of semiconductor IPOs that kind of IPO'd pretty recently, and if you just go back through here and have a look at this little tiny IPO base it gave, and it had kind of this one bar here and then all these inside bars. And so this is what this new scan is going to find. It's going to find like these IPOs with inside bars. And, you know, this had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 11 inside bars inside this one bar here. And then bang, it just went nuts. Okay. And so it's a pattern that repeats in the market all the time, these little inside bars after IPOs. And so definitely watching KSPI. I'd like that to have more inside bars than just 4, but you know, shit, we'll see what happens. MasterCard, just another example of some insane Darvas boxes. MIN on the ASX. I just want to talk about this one because I've been talking a little bit lately about PLS, and I've got a position on PLS as I stated a month or so ago. And I just have a feeling that these big miners are bottoming. Okay, all of these lithium stocks and rare earth minerals and stuff. MIN, it used to be a darling of the market. It's been churning down, then churning sideways, and now there's just real signs of a bottom here. Okay, and I just think it's worthwhile noting that. Maya in its 3rd box. Okay, and I move on. Netflix, holy shit, right? There's just so many examples. I like finding these Darvas boxes here that have kind of other resistance, you know, as well as a Darvas box. Okay, but here's Netgear, you know, it's pretty good little setup. There's just endless ones. I'm not going to crap on forever. This Novadisk, you know, this is one of these companies. This and LLY are the stocks behind this weight loss drug, you know, Ozempic, and there's another one. There's another name for the other one made by Eli Lilly, but I forget its name, but who gives a shit? And you know, this stock is just going up and just forming Darvas boxes. And so a great example of how you can kind of couple fundamentals with Darvas boxes. NXT, and I kind of missed this move on NXT, but I definitely know that there's a bunch of traders that I'm in touch with that are in it, and you know, who knows how high this sucker's going to go, but it's sitting here in its 4th Darvas box. That could tighten longer. There's nothing that's going to stop me from, smashing the shit out of that on the breakout. PLS, what I talked about. QNST, nice Darvas box. Super Loop, okay, this was its earnings day here, and then this was an indicative takeover offer that got rejected. So, I mean, shit, interesting stuff, right? You had to do your own research on that. All of these stocks, I just love this Darvas scan because look at this, the tight little Darvas box here. I'm not going to take that. It's still in too much of a downtrend for me, but I like these. I like the risk reward on these boxes. It just gives you somewhere to put your stop loss and your enter point. And then all you need after that is the patience to sit with the winners and cut the losers. Okay, it's a mathematical thing. If you sit with winners and you have 2 winners out of 10, and those 2 winners make you kind of 20x your risk reward, and then you have 2 losses and you cut them really short, then you're gonna it's a license to print money. Okay, and that's what the best money managers out there do. They just play around with their risk reward. They keep their winners, they cut their losers. It's as simple as that. Okay, that's it. It's about 16 minutes, going to piss off. I hope you like that style. It was a little bit different, just really going through trend trading, and I can do similar stuff. We'll see. Leave a comment or just give it a like if you liked it. If there's no likes, then I'll go back to the old format next week. Cheers, mate.